Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, guys. Tuesday, and yesterday was a wild day. A wild day. Powell being announced that he's going to be staying at his post as president of the Federal Reserve, and a bunch of gamma unwinding led to some really interesting, and I would even say compelling, volatility in the S&P 500. Let's go to the chart. Wait, that's the wrong screen. So I just want to point out here, S&P 500 yesterday, shooting star. This does not have any kind of predictive value per se, but it is going to show up. I do think you're going to see people talking about it, so that you know what people are talking about. And this is a shooting star. It's not like at the top per se, but like it's there. People might be looking at it. Overall, though, big clue here. This 4,700 was kind of where all the gamma expired. And you can see how stuck they were in it last week. So then yesterday, we got a pretty strong move off of Powell. Interest rates increased, and then later we got this drop. Now, a lot of people are saying, oh, it was because the interest rates, maybe Powell actually isn't so good. Maybe that was markets reacting to Powell not being so good. But I think that this is actually more likely to be the options dealers dumping all of the stocks that they bought to hedge the options scammer from the week previous. And the fact that they dumped it to 4,700 here, I think is a really key tell, right? Because they want to sell it above 4,700, okay? But then there was also a really big market on close order, and that is also kind of a tell, because those guys that are really trading like big size, they like to do it into the close because of the liquidity that you get with the market on close orders. Okay, so now down a little bit overnight. Treasuries, on the other hand, just kind of had a doozy of a move yesterday. A little bit of further downside here this morning. I think it'd be really hard to buy it today, but the issue is when we look at a larger chart here, you know, like where do you look to? Where do you look to? You know, we're kind of in no man's land now. So, but a key point here, flattening in the 30-year end of the curve. Okay, it's not so extreme in the 10. In the 10, we're actually steepening on the 2s and 10s. But the 30 and 10s, and especially 30s and 5s, we are flattening, which is not necessarily a good sign. It suggests that they don't think that over a 30-year period that we will get very much inflation. They think that we're going to go back into a deflationary environment in the future. Okay. Oil is down. There's all this talk about SBR releases. A bunch of countries saying that they're all going to do it if OPEC doesn't increase their production. OPEC meeting, I believe, is it today? I don't know. It's soon. It's like this week. They're talking about it. But I think that what's going on here still is that the Saudis are mad about Biden snubbing them. So, okay. Natural gas still down here. It's okay. We want to watch this because Russia could try weaponizing the pipeline against Europe by withholding gas from them. There's tensions are flaring in Belarus and Ukraine. And yeah, so we want to keep a close eye on that natural gas. Gold took a bit of a hit yesterday. Now, granted, we had like a really good run here above 1800. So anything above 1800 is still okay, but the rates rising really hurt gold there, and we're having a little bit more of a drop here today. Silver, the same. Copper still in its range. But then the interesting thing is that when you come back over here into Bitcoin didn't do so hot yesterday either. The what was doing hot yesterday? The dollar up at 96.43 right now. Really good run up yesterday, and it's just been on a tear. The dollar is really strong right now, and that is causing all sorts of issues. Stagflation, maybe. It does kind of seem to me that right now the market is saying there's going to be stagflation. We kind of have to just see how it goes day by day. I mean, the thing is that it's the 30-year end of the curve, you know? Hey, Stick, you got here right at the beginning. How are you doing, man? Yeah, that is the 30-year, I think, is really interesting, right? It kind of suggests to me that the market is still saying that we're going to be in this generational deflationary environment, and that even though inflation might be more persistent than we thought, persistent enough to start to affect like the 10-year end of the curve. Well, not even the 10-year, like the 7-year, you kind of getting it, and the 10-year, it's not. It's like between the 7 and the 10 where there's this difference. And so it's really frustrating when we're trading these. If I want to trade the 10-year over here, yeah, like this is a 7 and this is a 10. So the 7 moves and the 10 doesn't. Stagflation would be good for, you would think, right? You would think. So here's a thought. If stagflation is the concern here, then why is the dollar rising? Why is the dollar rising? What you got there, Stick? Yeah, John Kemp, I am familiar with that name. Senior market analyst at Reuters. Okay, well, so the treasuries have had a really good run here, starting at around the top of the hour. It's been a little bit more constrained since the open, but that has been on the upturn, but that has very quickly been washed out, and they are now eyeing downside. Philadelphia Fed Non-Manufacturing Regional Business Activity Index 46.1. I did not hear anything coming out of my news squawk. Is my sound okay? Yeah, it's fine. I don't know what. I guess they just didn't say anything. We got the Richmond Fed Manufacturing Index at 8 o'clock today. That's going to be an important data point. Could it be as simple as people have forgotten what 1970s inflation was like and there's tons of free, easy, cheap money now? Well, I think the thing is that stagflation, as we saw in the 70s, is a complicated and confusing economic issue. Because we're always told, if you print too much money, then you'll get inflation. Right? And then you'll get runaway inflation, and that's how you become Zimbabwe. Okay? Yeah. But that's not what happened in the 70s per se, right? In the 70s, were they printing like excessive amounts of money in the 70s? Let's see here. Oh, that's right. The M2. The M2 got discontinued. Oh, it doesn't go back that far. It doesn't go back that far. Well, can I go back to 19th? No. 1960. I guess it doesn't go back that far. Money supply growth versus inflation, 152-year history. Okay, here we go. So now we can go to the 70s and we can say, okay, were we getting like excessive amounts of M2 growth? Leading to excessive, I mean, it's not the same thing as like this, you know? It's not so simple, right? Because you get growth, you'll get M2 money growth, but then you'll get like fighting against deflation, right? They're printing it to fight deflation, and then they come back in line, right? So, but there was other things going on in the 70s, right? There was like the oil crisis, and there was the whole thing where France was saying that they were going to go and redeem all of their dollars for gold. And, you know, there's all this stuff going on in the 70s, right? So this period of like slower growth and higher inflation was caused by a number of factors, right? And what eventually ended up happening? They had to raise rates because you see the Federal Reserve, they didn't want to raise rates, right? They said, "Oh, it's not that situation. We don't raise rates in this situation." But then it kept going on, and Volcker finally said, "Well, I know it's going to be painful, but we need to raise rates." And then when he finally did it, inflation came back in line, and once that came back in line, we were able to see GDP growth again, right? So it's this whole complicated thing. And when you look at today's environment, I see a lot of similarities in terms of how complicated the deal is, right? Well, the inflation, it's not due to the growth in the money supply. We're not seeing velocity pick up exactly, but what we are seeing is we're seeing supply chain bottlenecks, and we think that those supply chain bottlenecks will continue to persist. But then we also still have concerns about deflationary forces coming from further lockdowns in Europe over COVID. So what are we supposed to do? If we raise rates too quickly, too soon, we could hamper the recovery and not reach maximum employment again. If we don't do anything, we run the risk of the inflation getting out of control and doing real damage to people's savings. You know, it's and what you're supposed to do, like how you position yourself to best handle the range of options is kind of a complicated thing. And you can see all of the members of the Federal Reserve, like, you know, trying to sort that out. Like, okay, do we need to increase the pace of the taper so that we can react more quickly if we need to raise rates to handle inflation? How do you sort all of that out? Interesting part of the article is that perceptions are often more important than the fundamentals. Well, right, because what moves markets? Orders move markets, not fundamentals don't move markets. Orders move markets. If people trade on the fundamentals, then maybe fundamentals would move markets. But clearly, there's a lot of people that don't. Rittenhouse says Biden defamed his character when linking him to white supremacists. Yeah, I wonder why he get on TV and say that. Is there some sort of a legal point at which, like, saying that on TV improves your chances of whatever? Or maybe it's to goad Biden into saying something about it? I don't know. Nixon and the gold standard. Well, like, and here's the thing is, the U.S. moving from, like, when did they move? It wasn't really in the 70s, right? They kind of moved to a more of a fiat money system around even before the Great Depression, I think, right? And then you could still redeem the gold, so there was still a peg, but then because of France, thanks France, then you can't even redeem the dollars for gold, right? But that change that had happened earlier, it happened for a reason, right? Our modern economy could not run on a dollar denominator or on a gold standard. It just wouldn't work. Kyle likely has a publicist, probably. He is definitely, he's confirmed that they're gonna sue people, I guess. Oh, here you go. Perceptions are often more important than fundamentals, rational expectations versus differences of opinion. Efficient markets / rational expectations view assumes informed market participants react in the same way to data. No, short-term volatility due to uninformed noise traders and limits on liquidity. Market professionals, insiders have more private information and are better at interpreting public data than outsiders. In short time, market will settle at unique equilibriums anchored in supply, demand, stocks, capacity, fundamentals as understood by insiders. Not necessarily. Behavioral finance accepts participants reach different conclusions about how to interpret even commonly available information. There may be no consensus. Participants try to guess how others will interpret data. That's correct. Keyes beauty contest. Herding behavior, volatility, and bubbles. Okay, but volatility and herding behavior, it doesn't just happen because of people's... Okay, so... Well, the volatility in particular, volatility of markets is created in part by the market structure. Just people going for liquidity creates a certain amount of volatility and will lead to these clusters of outsized volume, right? That's why what we really want to do. See, I wish I kept. Maybe I should be keeping better notes over here in the ZN, right? Because we can come over here and we can say, okay, they thought Brainerd was gonna become the Fed chair. This was the CPI print was really aggressive. Oh yeah, there was also. I think it was here this day. Was it this day? I don't remember. Maybe it was this day. One of these days was, oh no, it was the 5th. It was this day right here. 5th. That was the non-farms report, which was pretty good. Non-farms report, but then Brainerd might be Federal Reserve Chairman. CPI, okay, and then Powell becomes Federal Reserve Chairman. So you have these wild, and then what was on Friday? What was last Friday? What was the deal? The move up last Friday was kind of surprising, right? I don't remember now. What happened last Friday, guys? What happened last Friday? Other than, of course, the options expiration. It was the 20th, right? Yeah. The 19th. Sorry, it was the 19th. I don't remember now. I thought that there was like a piece of news or something, but the treasuries went up quite dramatically, and I don't remember why. Maybe we can go back and we can look at our stream here and see what I put down. It was packed with breaking news. But I don't remember what the breaking news was. Oh, that's funny. There was some news and that moved the bonds the other way, right? There you go. Expectations about what other investors think rather than expectations about the fundamental profitability of a particular instrument. Yeah. But I think the knowledge that we have today is much more sophisticated than what Mr. Keynes had in his day. Okay. So we understand more about market microstructure. And what does market microstructure teach us? That orders are what moves markets, that the impact that orders have on liquidity is actually quite demanding and much more than people realize. And so any reason that a person will trade is potentially a reason for the market to move if enough of them are doing it. And we can go in and we can look at certain things to predict the future orders to be able to determine which way we're going to go. So that's why, for instance, Goldman Sachs is pretty well entrenched now on this call that we're going to have a melt up in the last 2 months of the year. Well, after Thanksgiving, basically. Isn't that the prisoner's dilemma? Game theory, the other guy will cheat to get more shares of the price. That's maybe something a little bit different. That is a different issue that I think we've only just begun to touch on, which is that oftentimes actors are rewarded for making irrational decisions. It's a paradox that continues to come up in game theory, that acting in an irrational manner can actually be beneficial to you. And it kind of suggests that humans have learned to be irrational because that's what gets rewarded. No, that's not the greater fool theory. It's called the paradox of rationality. So, man, I feel like my head is... The paradox of rationality is that, like in the prisoner's dilemma, you got two prisoners, and if they both stay quiet, then they both go free. But if one person tells on the other person, then they will get money or something, right? So what ends up happening? The rational thing is for both actors to not say anything. But what inevitably happens is one person will tattle on the other person. Therefore, the irrational choice, which is tattling on the other person, has a benefit. And so I'm saying that over time, humans have learned or even evolved in a way in which they act irrational in certain situations because they get a benefit from that irrational behavior. And we do it without even realizing that it's irrational. We might think that our decision is extremely irrational, but it's really, when you are really able to analyze the system in an irrational way, you see that it's not. And it's very pertinent to day trading because number one, sometimes you can go and make an irrational choice, insert some chaos into the market and make a ton of money from it. But two, because you might go out there and see somebody, they've made a lot of money from going YOLO all in on options, and you might think, well, I should go and do that too. But it's the paradox of rationality. Not the people that were rewarded weren't necessarily rewarded for making correct decisions. So you can have people that make absolutely wrong decisions, and in the short term, they are rewarded for it. Although in trading, I would say that if you don't have a solid strategy that actually has an edge, that in the long run, you will lose money. An edge, and I would say an edge beyond just being able to take on risk. Yeah. But I think the more interesting application of this is in modern society, people are intentionally acting irrational now. Like they understand the system and they make irrational choices intentionally. And this is very much happening in the political system in particular. This is where like the whole woke situation, right? It's irrational. And I think that there's even an acknowledgement that it's irrational. But why did they behave in that manner? They behave in that manner because they know that that's how they get what they want, which is really an awfully cynical approach to politics, right? I'm going to, do all of these nasty things because it gives me more political power and gives me what I want in the long run. And Democrats started doing it. Republicans saw how well it worked, and so Republicans started doing it. And now that everybody's doing it, you just kind of have chaos. So that's another thing is in something like the prisoners paradox. Like if both of them rat out on each other, then I don't think you get anything, right? And then everybody loses. When everybody tries to take the irrational decision, then we have problems. But it's more complicated than that. I really think, I don't want to be like conspiracy theory on you here, but I really think that people underestimate or underestimate the danger of Chinese manipulation of social media. It's out there. It's very strong. It's affecting our society, and it is affecting you far more than you realize, because you think that these are all real people. You think that this is all real activity, and that the reason that this particular thing is popular or that is because that's what people want to see. But when I think often the case is that the Chinese are manipulating things. In most particularly on Reddit, I actually think I could be wrong, but I actually think that you see the Chinese influence more on Reddit than you do on TikTok. But they are definitely doing stuff. By the way, did you see this story about the Chinese hypersonic weapons test? Oh my gosh. So, like, they've done hypersonic weapon tests in the past, and nobody really said anything about it. And then this week, kind of started over the weekend, we started to get this whole thing about they did another hypersonic weapons test, and the U.S. military is really concerned about it, and this, that, and the other. And it was kind of like, they weren't really saying what the deal was. It was like the media didn't want. It was like somebody didn't want us to know the truth. I'm sitting here. I'm like, what's the deal with that? Is it that they're not telling the media everything, or is the media kind of keeping it quiet? I actually think it might be the latter. I think it might be that the government doesn't really want to tell people what happened, but it sounds like to me that the reason it's such a big deal is because it wasn't just a hypersonic missile, but that it was a hypersonic missile launched from a very fast moving satellite. Yeah, that makes sense. Have a satellite, it goes over the North Pole, it shoots a hypersonic missile, and then that hypersonic missile can hit the U.S. before you have any clue what's going on. So now it is what Donald Trump was saying in the beginning. You remember the whole thing about Donald Trump created the Space Force, and the liberals were like, this is so dumb, and we're going to get rid of the Space Force when we get put in charge. But then when they did get put in charge, they kept it. It's because they knew that the Chinese were trying to create weapon satellites. FTH, that's very likely to happen. It seems to me, I'll go a step further. Everybody was talking about there's going to be a United States Civil War and all this sort of nonsense. I think that it is more likely that there is a Chinese strike on American citizens before there is a civil war in the United States. Not that either of those two things have a very high probability of happening, but it is more likely, I think. Yeah, that article from Reuters was confirmed in October. Yeah. Confirms a very concerning Chinese hyper. Oh, that was in October. You're right. No, but the more recent leaks are more explicit, though. Like when you go to Zero Hedge, and I don't know where they were pulling it from. I think they were pulling it from the Financial Times. Futures underwater as tech sell-off spreads yield spike in lira imports. Oh, okay. I wouldn't really describe it like that, but... Rounding error, oil prices surge as Biden SPR release backfires. Oh, we are seeing a rise in oil here this morning. I missed that one. Even it was kind of, it had happened even when we did the morning rundown, but it just didn't look significant at that time. We better read that here real quick. Taper is a good news for the bond market. It is actually, and actually, I actually think that a fast taper might actually be good. Here you go. They did get it from the Financial Times. China's orbital bombardment system is firing hypersonic weapons. Yeah. That's concerning. Does the United States have space weapons? Oh yeah, we do need to turn on the ticker. It doesn't turn itself on. Why is that? Okay, so if we go to 6 o'clock, it hits the command sudo timeout blah 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 blah. But it doesn't actually run, does it? And I wonder. Where am I? If I do it from the home screen, get rid of those. It seems to be running. Why the Quran runs the command? Why doesn't it run the actual thing in the background? I don't understand. Do you think we'll see? I don't know. It's starting to worry me, I tell you that much. Yes, FTH, you're right. There is a new version of NinjaTrader. I've been, they give me the release notes, a couple weeks before it happens. It actually seems like this one took a little bit longer than usual. I had completely forgotten about it. There's nothing too big in it, but let's go back and look at that, actually. We'll go back and look at that. I have a Shark vacuum, I believe is what it's called. See, most of these are just like bug fixes. Fixed, changed, removed. Yeah, it's just bug fixes. No new features in this one. But turning on the ticker, that's definitely a good thing to do. If I don't turn it on, then what's the point of even having it? But I don't know how to explain what the deal is with the Maybe I don't need the sudo command. I don't know. It's so weird. That's funny. Jake Sherman, I asked Banks if he was supporting McCarthy for Speaker. He replied and CC'd McCarthy on the email. Hey, Jake, I left no room for doubt. I support Kevin as a conservative leader and doing everything I can to help him win. Have no doubt he will win and make a great speaker, and I'm quoted extensively saying as much. I'm not sure why that would matter. Somewhere in an alternative universe, Seth with an MBA, yeah, right. The Seth that went into quantitative finance for his degree rather than computer science. I think that Seth might be stressed out and not as happy, to be honest with you. So it's kind of interesting here in the treasuries. We've traded a pretty decent range since the open, but hasn't really been able to go anywhere. With the holiday, remember robots. Tomorrow should still be strong trading, I think. Yeah. So we often have big moves going into holidays and even into Thanksgiving. In fact, I think the past 2 years we've had some big moves going into Thanksgiving, and we get preliminary GDP, new home sales, personal income, personal spending, consumer sentiment, and of course the unemployment claims. So tomorrow's going to be a back day. I don't know. In terms of volatility in the treasuries, it looks to me like there's just a liquidity problem in the markets overall. So do you see here in the treasury, we're only putting up like 2,000 at a level. So there's not a whole lot of interest in the treasuries today, but the liquidity is also really low. And so they're trading quite a bit. Is there an advantage with the MBO data? We do not have enough information to know if there is a significant enough advantage in MBO for retail traders to justify the cost. There appears to be some efficacy for it if you are attaching it to a neural network of some sort. I'm betting you that if you're a high frequency robot and your position in the queue is a really important part of how you trade and stuff, that MBO data probably makes a big difference. So it's just Bookmap pushing it? Well, I don't know if I would say that. I mean, they saw the opportunity and they made their platform so that it would work with MBO data. They realize that with the way that MBO works, to really truly make full use of it on a DOM, for instance, requires vastly different data structures and could negatively impact the performance of your application. Like for Jigsaw, it would be a really, really big undertaking. It would require completely redesigning large portions of the backend, I'm sure. Not that I have ever seen their code, but just what I know about the data structures, if I was doing it, they would probably have to change things a lot. And you're doing this all for something that we're not even sure you can actually make use of it, right? Being able to detect stops is an interesting thing, but we don't have any evidence to suggest that stop orders have more or less impact than any other kind of order. In fact, I think theoretically speaking, based on what we know about market microstructure, whether it is a stop order or not is probably irrelevant. And maybe you could identify locations where you're more likely to see stops. And then, you would be able to take those trades, would be more reliable, right? But I think that when you really go into the data, what is more likely to happen is that it's likely to be very random. So it's an interesting area of investigation. We should certainly investigate it. But at this time, I don't see enough evidence to justify a retail trader paying another $100 a month to get it, Just being open. I don't think we realize how how big of a pain it was for Jigsaw to ramp up a bigger development team and develop those charts for us. I think that really put them behind where they wanted to be. You imagine, seriously adding MBO data would be like a 9-month ordeal. And then, does it actually help you? We don't have any evidence to support the idea that it does yet. Well, it's kind of time to start thinking about the S&P 500. I don't know if 4680 is the most optimal location, but I am kind of looking for a possible retrace of yesterday's bear move. If our theory is correct and it was just gamma hedgers, then we should see a buy the dip day today. And we'll probably be able to get pretty okay trade off of it too, because a lot of people are going to be so wary about the way that it closed yesterday, even though the way that it closed doesn't matter at all. Paris Hilton and Bill Ackman are backing a $300 million NFT. The NFT thing is really getting out of hand, I think. Elon Musk had some choice words for cryptocurrency exchange Binance on Twitter, eh? Okay, let's see what that's about. Elon Musk, he's been yapping a lot, hasn't he? The Tesla CEO raised concerns about the plight of fellow Dogecoin holders caught up in a technical glitch. An upgrade of the Dogecoin network on November 10th appeared to have caused an issue with network withdrawals. Binance said in a statement the next day, a very small number of users were affected, they said, explaining that some previously failed Dogecoin withdrawal transactions got resent after the update, and we are kindly requesting those users to return the assets. Okay. Dodge holders using Binance should be protected from errors that are not their fault. Yeah, good luck with that. What are iceberg orders? So, did you watch my last video? Was I not a good enough explanation? So an iceberg order is a feature of the exchange. It's an order that will only show a certain amount. So these guys, like if you were trading with Ready, you would come in here and we would say, okay, I'm going to put a buy order here, right? But then what they could do is they could right click on it. Actually, I think in here, Jigsaw, I can click on it, right? And I have all of these things. I can say how many and what the stop volume is and everything. But these institutional traders, they will have another set of properties. One of them will be refreshing order, and another one will be max quantity to display. So they will say, I want this to be a refreshing order, and I only want to show 300 of it, for instance. So what does that mean? That means that then this order will be sitting here, and if people hit into it and somebody sells all, 300 that I'm offering, then as the instant that they hit it, the exchange will automatically refresh and start showing you the next portion of the order, right? So you have like a 10K order, you're doing it 300 at a time, right? They'll be selling into it, and you will see 10,000 contracts trade into that price, and the whole time that bid will stay above 300. Like if it's an exchange side iceberg, it happens before we even get the updates. So we will not see the level 2 change. We will never see the level 2 go below that 300 level that the iceberg is, because the exchange automatically refreshes it. Okay? So what that means is that there's could be a large amount of trade go into that price, because they don't put icebergs there unless they think they can get filled, right? So you could see 10,000 contracts trade into that price, right? But that whole time, you're probably going to be able to get filled on the bid, right? Because if you add your own order in there, you're still going to get the spot on the queue that it's showing you. You're still going to be 300 in line, right? So you get a situation where you get a nice spot in line, but more contracts than usual will have to trade in order for that price to go through you, right? So that can make it an advantageous position. Now, I wouldn't just trade it just because I saw the iceberg, but if you were already planning on making a trade, like a really great example is we're starting to get some trend, you see it come up, and then you see some selling against that trend, and there's an iceberg there to catch it all. That could be a great place to try and get long. That can be a great place to try and get long there, right? On the theory that the momentum is going to continue, because you're likely to get filled. It's going to be harder for them to sell through you, and you're still in line with the trend. Icebergs can be stops too. What do you mean by that? Well, oftentimes what will happen is they will come in here and they will pull. Like there might be a guy here that has 2,000 contracts on at 24.5, and he might have an iceberg there and cancel his contracts and add an iceberg, so that anybody that had a volume stop at that price will get triggered and start trading into you. And that's how he gets all his fills, right? You'll notice that most often when you see these icebergs, that the amount of orders on that price is usually not very high. It's very rare that you see like an iceberg hit and it stays 2,000 the whole time. That never happens. They want the amount to be low, because then all of the robots try hitting into it. Do market maker eyes? What do you mean? Do market makers use icebergs too? Sure, they could. Again, the use of an iceberg is you want to execute a really large order, but you don't want it to show up on the DOM. So you just as they execute into it, you add more and you add more. Yeah, I think that market makers probably do use icebergs. So for instance, I think that you will find very often when we get to extremes that you'll start to see some icebergs out there, because kind of what might happen is if I'm a market maker and I'm taking fills against the trend, the further it goes, the more orders I might want to take. It's almost like you're adding contracts into a move, and for us that's like super sketch, right? But for a market, the way that a market makers do when they're trying to take fills at every price, that can be advantageous. But you could get into a situation where we're moving up. So let's say that they're taking inventory short. You're going to get into a situation where you have way more short inventory than you're comfortable with. So any kind of move back down, any kind of selling that allows you to buy back and reduce your inventory at a profit, you're going to take. And so you might need to use an iceberg to do that. Is order flow better as compared to doing? Absolutely. Because what you're seeing on the chart is just the result of what happened. You don't actually get to see what happened with order flow. You get to see all of the data is there, and you can actually understand why things went the way that they did. Right. So we get to see that on this latest move, we did move up. It was a good 4-tick move. There wasn't super strong volume behind it. It was just relatively strong for today, but liquidity is light, and there wasn't very much selling against it at all. I've noticed the market go the opposite direction almost every time on CL when there's an iceberg. Wouldn't surprise me. You gotta remember, iceberg on the bid. This is the rule of thumb. More bids has a tendency to move it up. More offers, tendency to move it down. More market buys, tendency to move it up. More market sells, tendency to move it down. Bids canceling, tendency to move it down. Offers canceling, tendency to move it up. So an iceberg, what is an iceberg? More bids. It's going to have a tendency to move things up. On the average, overall, there's going to be a slight tendency, you see an iceberg, for it to move price up, if it's a bid side iceberg. But on any one individual trade, those kinds of statistics become basically meaningless. But if you have something else to tell you what's going to happen there, you know what the fundamentals are and that they're going to move it up today, and you see the iceberg, then that makes the iceberg a really advantageous place to get in, right? Same with buying the edge, if you already have a trade. And why do we bring all of these things up? Well, because these are all like small little data points. So the larger thing that we're trying to determine here is what are the market conditions, and what is our bias for the day. So for me, I think I'm biased long. I mean, I was slightly biased long just because we had such a monster move yesterday, and you're going to see some mean reversion. But now we're starting to see some trend up. Okay, but what are the market conditions behind it? And we can kind of see, we haven't really seen any icebergs throughout any of this action, really, have we? So what does that tell us about the liquidity on both sides? There's not a whole lot of people taking on liquidity. It's an illiquid market today. And that tells us things about how we're going to need to behave if we take a trade, right? Like if we were long right now, I think that we're going to want to try and let it ride a little bit, because the volatility means that it can go a decent amount. But when we get a pullback, those pullbacks are going to be pretty deep too. So I probably want to take some sequential profits and then let it come back on us, right? I probably want to go like maybe reduce some size around 28 half 29 if it gets there. We'll see how it behaves when it gets there. Let's just pretend that we're long, right? And then we might want to let it drop back into this area. Try and pick some more up at 26 half. Right? And each little aberration that you see is another data point that tells you something about the current market conditions, so that when you get the kind of move that you're looking for, you kind of know how to position yourself accordingly, according to the liquidity, right? If we're in an illiquid market, then, you know, another good use of that would be, say I'm really desperate to get long right now. What have we seen? Well, it's a very illiquid market, and the amount of market buying is vastly overwhelming the amount of market selling. So could I get filled on the bid at 27? I think probably. Could I get filled at 26 half 26? Dramatically less likely because of the current liquidity conditions. So if I'm really concerned, if I really want to take a trade right now, it might be worth it for me to just hit into 27 half, right? That 27 might actually have an iceberg behind it. That would be the kind of a spot where you would tend to see one. Okay, so see, we ticked up there, and if you had been waiting for the fill at 27, even though 1600 traded into it, you were in line at 2000, you probably did not get filled, right? And by the way, after 1600 traded, they stacked more on top of it. So, current liquidity conditions, what are your chances of getting filled at that price? Doesn't seem like so good. Whereas current market conditions, if you're already long and you want to get out for some reason at 27.5, pretty good chance that you're going to get filled at 27.5. In fact, there's probably a decent chance that you could get filled at 28, despite there being a little bit more liquidity there. Because the amount of market orders that we're seeing hit in on a minute by minute basis is more than high enough to fill that. Well, now that the ZB is back to 160 even, and on this move, what did we see? We did see, actually, the spread did not really change at all. But today we have seen a slight bit of steepening, some mean reversion after the pretty big doozy that we saw yesterday. We're about 3/4 of a point flatter from yesterday still. I'm seeing a lot of people on Twitter talk about the SBR release and the oil market not really responding very well to it because it was only like a day's worth of oil consumption. I don't know. The amount that they released probably could have an impact, but I think the bigger problem here is still OPEC, right? Okay, so they've come back now to 26 half. Wasn't very much traded to get through 27, so still very illiquid. 26 half, probably got filled there. I think if we wanted to buy, we might be able to get 26. We'll just see it continue. Now, are we seeing the spread do anything? Still no. It's unclear to me what is driving them. I am seeing some movement in the 6J. A little bit of selling in the 6J, so that might be part of what it is. That might also explain why you're not seeing very much liquidity fill, because they're just following the currency correlations. Did see the dollar strengthen a little bit there as well. Is that bad for the S&P 500? I don't know. You know what? I think what we shall do is right here at the VWAP, we will try taking a trade in the S&P 500. Okay. Man, like really so many people on Twitter talking about the SPR release now. It's kind of funny because they've been talking about it all week and nobody cared, right? And then they finally did it and it was like, oh, it didn't do anything. Okay, so they did fill at 26 and then now they're hitting into 25 half. So, and we are seeing the market orders very much change. So here in this situation, I think we'd say we still don't have very clear direction for today. The volume is chunky and the liquidity is low, but that doesn't mean that the move that we saw up to 27.5 should automatically mean I want to buy, because the spurts of volume that we get in both ways are a little bit limited. But on the other hand, if we wanted to buy in the treasury, I think that this 25.5 would be like a really great spot, right? Inflation is raging everywhere, but it's the worst in Latin America, reports Bloomberg's. Inflation shocks are spreading pain around the world. But price surges are busting through policymakers' targets in all region major economies. Okay, a little bit more volume willing to take fills at 25.5 compared to 26, right? And a decent amount of so this is not an iceberg per se, but there are people buying it there, as did I. But you can see the offer at 26, oh so really, really light. Still a good chance of getting filled there. So I am concerned that the S&P 500 might try and do a sell first. So we keep an eye on that. Now, in the 10-year, I see like 25 half is like fine, okay, for especially if I'm taking one tick. But then I'm looking at the micros at 1.65. That doesn't look so appealing to me. Given the liquidity conditions and everything so far, I'm not really anxious to take a trade over here in micros. These are just kind of like some example trades here. Probably should have taken less size up in here. In the E-mini, I could have taken more down in here. I heard you're a speculator. How you doing, Andrew? Welcome back. Sometimes I am, yes. Okay, well, initial move on the open does appear to be a buy. Treasury coming back there. Never got to fill at 26. Not that it wasn't a reasonable thing. It's just they ticked that way. That could be, though, the Japanese yen. In fact, I think it's very likely that it's the Japanese yen doing that because it's still moving down. So here, let's just puke that. So the issue I'm having over here still in the micros is like, I am slightly biased long, you know? But it's like, I don't really have a super strong reason. So it may be better for me to just not take any trades until maybe after 8. Like we could get something after 8, right? Because we got some manufacturing numbers. Well, we already talked a little bit about the market buy order stuff, but I don't understand your question, Andrew. Oh, do you think those who benefit most from NFT is the 100%. 100% that's what happens, man. The influencers love NFTs because it is a speculative instrument that they can actively sell. You know, there's nothing, you know, because there's no like fundamental value to it or anything. And because there's so many of them, you can just go and make one and then try and sell it. And if you're good at selling things, then it's great, right? And most influencers, that is why they get to where they are, is because they're good at selling things. That's why, like Gary Vee is all over the NFT thing. Is it because he has a strong understanding of financial markets and understands why that is going to be an asset that continues to move up? No. Is it because he has really strong technical skills and he understands the technology behind it? No. He likes it because he can sell it, and it's not some like dastardly thing on his part or anything like that. It's just, that's where he's going to be the most successful, and that's where he's going to gravitate to, right? You brought up an argument against their native iceberg detector, which is only, well, I don't recall what you're saying, but one thing that you want to note is that there are a lot of icebergs that are not exchange site icebergs. Okay. In particular, Trading Technologies has an order type that is like a synthetic iceberg, that when it gets filled, it will add them on there. But because it's not exchange side, they can trade through you, but then you'll bid it back up. And so those aren't going to show up on their native iceberg detector, even though they were legitimate icebergs. They were just synthetic ones. I don't know if that really matters a whole lot. Again, in my opinion, a lot of what I'm seeing them try and do on Bookmap is trying to apply technical analysis to order flow. They're saying, look, when you get an iceberg there, they tend to bounce off it and go the other way, and so you can trade on that. And that's technical analysis, right? using past data to try and predict future moves. Okay, well, so far here on the open, a more dramatic sell than anticipated. The treasuries did come back quite a bit. I think we could have almost got 1.655, but now they're back to 1.65. Now, the treasuries may be having the move up here just based off of flight to safety, because I'm just kind of seeing like a little trickle of volume. It kind of seems like there's not, like, I don't see a meta order out there or anything like that. It's just kind of like the current volume that comes through. Okay, so that's a pretty big change there in the E-mini. No. They very much ran away from me there. Well, that's good that I was able to kind of detect the change in the flow that quickly, though, in the ES, right? Yeah, they mentioned it only provides native and not synthetic. Yeah, like here's the larger problem with that kind of a trade, right? Like, provide historical data on it. You know, in this instrument, when you see this particular thing over the last X years, what was the tendency for it to happen after that? Because when you're looking at it, it's gonna seem really clear. Oh yeah, they hit an iceberg and they tend to go the other way. But when you do more in-depth analysis to it, you realize that with the kind of risk parameters that we're using, that it's really not a very good signal. And if you're going to take a larger risk on there, there's too much other stuff going on that it kind of like almost doesn't even matter. Okay, interesting. Very interesting. So there was a pretty aggressive push there by sellers, but it kind of ran into a wall and fizzled out. So here on the treasuries, they're all moving pretty closely in line still. Oil reserve news could Can 100 volatile range on NQ here? Oh, it's so... What do you think the average people who are buying is failure traders who can't trade? And what if crypto? Well, look, when the cryptocurrency market crashes, everybody involved in that mess is going to be screwed, right? There's just no way around that. Even if you buy and hold through that, it's not necessarily, there was a lot, especially when you're in altcoins, right? There's a lot of people that held through the 2017 rush, right? And they're still down. Like I look at my old portfolio, it would still be down if I hadn't have liquidated it, because a lot of those altcoins just never take off again. So it was a pretty good selling on the open, but they're back to the opening price. I think this is still in line with the scenario that I was expecting to see in the S&P 500, where we could see a buy the dip sort of a move. Now, if we do get a buy the dip sort of a move in the S&P 500, are the treasuries going to increase rates on them in response? We'll see. Okay, a little bit more positive of volume there. They did wipe out in volume, cumulative delta wise, the downside move that we had. You're honest, that's why. Well, thank you. But part of it is just that I'm really just not a very big fan of the current state of the cryptocurrency market. Well, to do this trade in the E-mini, I took on a massive amount of risk, but it is starting to pay out for me. Still unclear to me if some hawkishness is going to come into the treasuries in response. They're still giving you an okay spot there at 6.5. So somebody sells into it. Good luck with that. It kind of looks to me like that the retail traders aren't really all that anxious to get involved in it right now. I suppose, though, if we did want to buy it, probably would be better to do it in the 5-year at one spot, 134, right? Oh, look, there is some volume going through there. Well, there was one order just then, at least. Okay, this flash PMI news here is apparently a bigger deal than I realized. Okay. So it looks like we're getting a slightly lower than forecast, but it's a little mixed. The services PMI was 57, and composite was 56. What was the manufacturing? 59.1. So that one was slightly above. E-mini appears to be reasonably happy about it. Forbes magazine tweets, Activision Blizzard's new solution must spur actual action from Sony, Microsoft, and Nintendo. Yes, all three of the big game makers now calling out Activision Blizzard. I think that the only thing you can do is get rid of Kotick. He's gonna have to stand down, or the company is just gonna continue to languish. S&P 500 making some progress on the upside. We still got some ways to go. Let's say above 90 though is a pretty good spot to be in. So also seeing some stuff about COVID in Germany not going so hot. Merkel and her successor played politics and let COVID run wild, says Bloomberg. Schultz spurned a Merkel proposal for a pandemic crisis meeting, and Germany's COVID rate has surged to double the spring peak. My lips are very chapped this morning. I am noticing a small amount of flattening coming through in here because you can see these two are getting pushed down a little bit more. Well, so far the S&P 500 doing really well here has not really affected the treasuries. The dollar did come back there a little bit, but the Japanese yen remains down. Oil's at 78.53 and is really like moving quite a lot. Also seeing a little bit more activity in the 2-year than usual for today. Bitcoin doing a little bit of a rally too, it looks like. So there, the treasuries floating back up to highs, actually. I don't know about this. I mean, you're kind of at a pretty key resistance level in the treasury is the problem. So it's kind of hard for me to say. Like 645 would be great long in micros if this reverted, but I don't really know. I think at the moment it feels like that's not going to happen. There is a little bit of pushback there too, yeah. They are kind of resisting those new highs at around 28, 29. They may be able to push into 29, but I think it'll be tough. Like the amount of volume that we've been trading is not all that spectacular, and we've only been able to get here because of low liquidity. If the liquidity on the offer firms up, it'll be hard for them to push through. And you could see it just happen a little bit there at 27, right? They bought 1286 in it, and then the offer firmed up again. Yeah, I'm talking about the micro treasuries, which are on interest rate and not the actual price, and so they move in opposite directions. Okay, so now we're getting a little bit of liquidity closing in on it on both sides in the 10-year. The 5-year is pushing up much more dramatically now. So we're getting a little bit of steepening now. Remember, there's still some important numbers. Richmond Fed Manufacturing Index at the top of the hour. There's also a 7-year note auction today. Well, gee, I tell you what, the 10-year treasury is awfully quiet and illiquid, considering that there's a 7-year note auction today. And it does look like the buyers went out there. Sorry, the sellers in the 10-year. E-mini still looking okay. You took a little breather there, but they still look positive. Oil turned a little bit, around 78.5. Brannigan says, at some point today, you will learn and see volatility is a two-way game as we trade the lows again in ES and NQ. I think he's going to be wrong on that one. I think the other side of that. I'll take the other side of that. I think that this is a reflexive buy the dip. Emptying the oil reserves is the energy equivalent of printing more gas? Not exactly. Well, I missed an entry there. It's really, if you're trying to get filled on the bid, if you're trying to get limit fills in micros, it's kind of a questionable thing. Like when I'm taking profits, I'm usually fine, but trying to get in is tough. The steepening that I was seeing is maybe kind of evened back out though. So or here where I would have got taken my trade, it would have been great, but now it's not so good. Oh, I'm not going to read that one. Okay. Sorry. Hmm. Bit of a change there. We're getting way more liquidity here in the treasury. By the way, they've thickened up a little bit too. They're at like putting 2500s out there now. So I'm curious to see what's going to happen when they get back to that 4700 in the E-mini. A fairly large iceberg there at 25. So now I'm starting to see more like, there's a 7-year auction today, right? Oof. A little bit of an aggressive downtick there. The way the sentiment changed in the 10 years was awfully quick. Now, we're still like in the range. And again, we're very illiquid, but I'm kind of starting to wonder if they're not going to try and attack these lows. We are going to get Richmond Fed. So there's no estimates, but previous reading was 12. So that's probably going to be significant news. I don't really see liquidity pulling ahead of this one, which is interesting. And the 30 years trying to cause a bid here. Wow, E-mini trading a lot there. Okay, sounds like the Richmond Fed number is in line with expectations. Now E-mini having a bit more dramatic of a pullback than we've had. That is a change. It does seem like a volatility over there in ES is still pretty strong. Some of that liquidity that we saw had stacked on the DOM here, and the treasury is gone. Little tick up there. So this is not taking very much to move them, to move the rates. Think that they'll come back up to 27 in the 10-year? I bet you it could come up there very quickly. Jackville CBX says, would you like to know more? I think he's making a Starship Troopers joke. Okay, it's back to 84. We did see a pretty big change there in the volume, but it's kind of evening out right now, so we kind of will just have to see where the next move takes them. Treasury is still very indecisive. I'm kind of still sitting here thinking, well, you know, if we think that the rates are going to increase, it's probably better to take it over here in the 5-year, right? Well, geez. That happened quick. Let's... It was actually the 30-year that kind of broke there, interestingly enough. The only one making money today is everyone's broker. No, I think that some of these guys that bought the dip in the E-mini are making money. Oh. Apparently, the Treasury, the Reserve of New York's outright Treasury purchase operation is not happening today because of technical issues. So that is why they are moving. That's not good. Reschedule. Okay, so they go out and buy treasuries on the open market. So they're not doing it today, they're doing it tomorrow. They're not doing it today, they're doing it a little tomorrow. And I think that that's probably why you just saw the curve slump across the board, particularly in the 5. So let's reset things since it kind of planned out here. This is definitely some choppy action for the treasuries, especially considering everything else that we've done today. Clearly, I might be on the wrong side of this. So I think that I'm going to I think I'm just gonna take my profits over here in the treasury or in the E-mini, which was not very much. But it does look like that the move that I wanted to see to 4,700 isn't coming through. Now, I don't know if that means that we're going to visit the daily low again yet, but I'm still skeptical that we see the low, and certainly skeptical that we'll see the overnight lows, but let's see what happens. Now, this... over here in the treasury, I'm wondering if this news that the outright purchase operation is might only have a very short term impact. See, it was interesting to me that when the E-mini kind of flipped around, that I almost immediately noticed it. I probably should have actioned on that. Could have protected more of those profits, but... I was shooting for the home run. Well, that's not too bad. This is a little bit of a change right there. Trying to recover the open. That was a little toxic. That was a little toxic, wasn't it? And that one seemed to take some time to filter out to the market too, because when we were looking here in the 10-year at 6.5, it moved quite quickly. It's going to be funny if that's like the lowest that decline in the E-mini goes, and then they go back up to the highs. That'll be hilarious. What was the news? Okay, so I'll read it again. The Treasury outright purchase operation from the New York Federal Reserve will now take place at 11 a.m. on Wednesday, November 24th. So there was some buying that was going to happen from the New York Fed. It's not happening anymore, and that's why things came down a little bit. So far, this is not what I wanted to see. The way it's behaving. It didn't really continue much from that. Market still looks pretty liquid, but there is some stacking there, 24 and 23 half. Let's see Bitfinex got here now. Update Bitfinex regarding security audit, financial audit, and more. We are in the process of engaging Ledger Labs to perform an audit of our complete balance sheet for both cryptocurrency and fiat assets and liabilities. We are working with them on both the security and financial audit. Ledger Labs doesn't even advertise financial audits as a service. They don't appear to be teaming with CPAs and aren't registered with any financial auditing body. It looks pretty unprofessional to use a firm that doesn't practice financial auditing to do your financial audit. Alarming, in fact. No wonder your business is in shambles right now. You don't even have the intelligence to bring in a real financial firm. Looking more and more like an inside job. Yeah, that's okay. That was on Reddit. Interesting. EU to push for transparency on political ads. So I'm wondering now if we just churn until Thanksgiving. Now, there's still a lot of economic news tomorrow, so . But here today, yeah, we had a little bit of a trade that would have been that was an okay trade, but it just didn't really continue through. I think that's fine. I think that one's fine. The volume in the 10-year has gotten pretty weak now since that change in the purchase operation. It just kind of seems like not that many people are interested in it today, huh? You guys are definitely listening and watching it though, huh? Some 3Ks in the 10-year. That's interesting. And there's another little step. Just kind of a temporary one, though. Look at that. They almost immediately turn back around. I've still got 45 minutes here. I don't know. I'm questioning if there's markets got to move in it or not. Well, the E-mini might. The E-mini might buy the dip here. Let's see. I might have let myself get discouraged on that E-mini trade too quickly, huh? Okay, we do not see crypto assets as a direct threat to financial stability now, but they could be in the future, says Bank of England's Governor Bailey. You know, this may yet move. I'm starting to wonder if the treasuries are going to do something, but it's going to be long after we're gone, because we do have an auction, right? And I'm kind of wondering, that's, even though it's a 7-year auction, might not be such a great auction for them. The way that the market is behaving here right now does not suggest that there are tons of people excited to go and get involved in the auction today, right? Good morning, Bob. How are you? It does feel quiet. There's a decent amount of trading there still in the 10-year. They gonna make a tick up here finally? Okay, hey, that was a pretty strong tick take too. So. You know what? Made a little mistake there. It's okay. It was a good mistake. It was a good mistake, really. Oh, you know what? I think I'm crazy. I think I'm going crazy here, guys. I don't know what I was doing there. Dabbing oil reserves plan doesn't seem to be bringing the oil price down today. Yeah, well, you know what? On this sort of a thing, I would give it a little bit of time because I kind of think that tapping the reserve kind of like doesn't matter. You know what I mean? Yeah, I bought the 30 when I wanted to sell it. I made a big mistake there. But luckily I caught myself before things really moved. I kind of see a little bit of buyers nibbling here, but they're being awfully skittish about it. If we do make a move back up to the highs, and I do think that there's a good possibility of that happening, I think that we should see the 30-year try and lead that, right? They're all kind of mixed up here, though, at the moment. not all quite in line on terms of bids and offers and so forth. See, the 30-year just ticked up. 5-year going to tick up. The 10-year certainly doesn't look like it's going to tick up. Okay, and the 5-year ticked up but didn't hold a bid. Okay, there's a tiny bid now, but you see here the 10-year not changing. 10-year not ticking up. 25.5. And the 10-year ticks down and drags the other two with them. Well, so another thing I'm noticing, well, actually, it's too late now. I was just about to say, the S&P 500 didn't really bounce. They probably are going to go and try and attack the lows. Let's see. That was an attempt there, but they didn't quite make it. UAE says there is no need for OPEC Plus to increase oil production any faster despite pressure from major consumers such as the US and Japan. There you have it, folks. I mean, the whole thing about releasing more oil, it's not enough of a release to really change the oil prices. I think that's probably the wrong way to approach it, right? I think the correct approach here is that a large number of countries are coordinating a release of their reserves. So you are seeing some political unity from the consumers on that the prices need to come down. But the bigger thing here is that that's not having any impact on what the oil producing countries want to do and how much they're going to produce. I think the only way that you're going to get a change is if the Biden administration starts being nicer to the Saudis. So I don't know if that is like a direct reason, like right now at this very moment, to buy oil per se. I think that this move will probably is a little bit speculative and might come back a bit, and then we'll see where they go. But probably it's a good reason to continue being bullish oil, right? Okay, so a hint of flattening there again. The 10-year ticked back down. Yeah, the 10-year ticked back down. Kind of dragged the other two with them. I still see like the 5 and the 30 kind of trying to push up, but the 10-year not getting there. My spot here, though, not being so hot. That's interesting. We're just kind of getting stuff going all over the place here today, aren't we? You know, even though the 10-year came down like 2 ticks there, they're still only at 1.655 in the 10-year yield. It has been more the 30 that has been selling here. The volume is still kind of... The 30-year being the driver, though, on the downside, that's really interesting to me, actually. It's really steepening. Like the 5-year is really driving there. In a hypothetical 2024 election for president, Donald Trump would win in key states that he lost to Biden. And that's interesting. I don't know. It keeps looking like it's coming to a key point, and then it just doesn't kind of go. It's a little confusing. Let's kind of try and maybe gather some a better reference here. Markets twerking like a crackhead heading into holiday period illiquidity. Could be. I don't know. Something is happening here in the 10-year. Like the size is increasing. $30 years seems to be backing off. Now you see, it's like the 10-year once again. We're getting like some push and pull going on here. Okay, there's Z-Mini. Z-Mini going to make another attempt to break it. Where was that click? Ask pulled. Well, even he didn't go for it, but they're still hanging out within the range of the low. I do kind of see in the 10-year here a little bit of support at 24. This spread just seems like all over the place today, huh? Well, I think the only reason why I'm still like engaged here in the treasury is because there's an auction today. And I'm not seeing quite the activity that I would tend to see on an auction. So I kind of suspect that auction is going to go poorly. But you can see here, it's like it's not really. And just like one or two ticks up and the whole curve kind of makes the whole thing look different, doesn't it? Waukesha Police Department, no one chased Brooks before mass murder and parade, huh? Survey, nearly 79% are holiday shopping early due to inflation fears. I don't know. So, like, are we right now? The last tick was up. So, are we going to go push back up to the highs there? Well, I don't know. The thing that I find interesting about this was that when we were pushing up to the highs, it wasn't really anything driving it. It was just kind of the volume just kind of pushed there. Then when it came back and we tested to the downside, there was some actual news. But then that recovered, and it's just kind of sat tight. Goldman Sachs says OPEC has no reason to boost supply aggressively. We'll go move on that. And they've already had such a good move today. I don't know if that's actually going to make a difference. We still got 20 minutes left. You can see the steepener, it's still on, right? They're buying the 5, they're selling the 30. You're even getting this thing where, like, just the change in the level 2 in the main treasury instruments is causing the micros to move around a little bit. The 5-year broke out there, though. The 5-year broke out. What? Match and Tinder are in a multi-billion-dollar legal battle? I did not know. Which one of these two is going to win out, you think? Well, the trend has been flattening, so I think it would make sense to sell the treasury, but we were a little bit lower not too long ago. They were giving us like 0.5, 0.6. So that's kind of curious that the 30-year yields aren't quite even the same. They may just be favoring yields overall increasing or decreasing. Aha. So that was a pretty big change there in the 10-year. Of course, the 30-year is kind of dragging its feet. Sorry, did I say the 10? You know what, man? I've been having the hardest time lately. There's so many instruments. Trying to give, when I'm talking about something, trying to give you guys an idea of what I'm talking about. And I'm probably blabbing about a bunch of stuff that you're all just like, who cares? the 10-year stepped up there. They're going to put pressure on 26. The 5-year is dragging them up. The 30 is starting to respond to it. We do not, okay, RBC, we do not entirely rule out the possibility that Saudi Arabia might actually call for scaling back the OPEC production increase. However, we think several Gulf states with close ties to the U.S. would oppose such action, fearing the political blowback from Washington. It seems like oil is just all of a sudden the hot thing today. I'm surprised that they're not moving more. I mean, obviously we had a strong move up, but then after they peaked, it's just kind of oscillated and sat there. And I'm surprised that they're not moving around more. Okay, so there is the 5-year up at its highs. And by the way, the equities market, you know, they kind of sat down at lows, they attacked it, but not really, and now things are looking like okay again for them. Meanwhile, the 5-year is okay. The 5-year is pushing. Look at that. That moved quickly. Well, I don't know. The 5-year came back there really quickly, but it looks like they're a little illiquid there at the moment. The 10-year did have a large order are showing up above them again though. Samsung picks Texas town for $17 billion chip factory. Wow. That sounds like a big factory, man. Well, I definitely didn't see this much steepening coming in, right? I actually kind of thought that it was going to flatten a little bit. It could flatten back out. I actually think there's still a chance of the 30-year buying up here and things flattening out again. The key will be here if the 10-year... Okay, so a little bit pulled off at 27, but not a ton, and there wasn't a very good bid. If they can step up there with a good bid and put some pressure on that 27, we might see a little bit of pressure burst out the top here, right? You get what I'm talking? You see what I'm saying? Feeling what I'm saying? But 30-year... no. I'm not really seeing a very consistent trickle of volume in the 30-year. I mean, it is a buy, but... Oh, come on. Come on. Nope. Five-year kind of looks like he's ready for more, huh? Okay, 756, that's better. Ah, there we go. Now you actually need volume. Nope. Oh, would you look at that? Well, not as much stacked back there at the 27, but we ticked back down and there's a good offer on there. The 5-year doesn't look like it's done. Yeah, look at that. We're just seeing more steepening, I guess, more mean reversion. Did see a little move in the Japanese yen there, by the way, when we moved up, so... There's again, tick up. Well, I think today, pre-holiday chop. Pre-holiday chop. The equity is failing to take the 4,700 handle. I think might be a bad omen, but we'll see. Activity is relatively light, so I will see you guys tomorrow. And in the meantime, I'll probably put out a video tomorrow morning. We'll see. In the meantime, stay profitable, friends.